Joining us now is Ibrahim AlHusseini, FullCycle Founder and Managing Partner. Ibrahim, good to see you. Tesla board members saying here the distractions are over, declaring victory, but board critics might say Elon Musk has been the one distracted by other companies. First, the Twitter purchase, and now we've got XAI. What do you say?
Gosh, is he distracted? Of course he's distracted, but somehow he's also superhuman and can manage to run all these companies relatively well all at the same time, you know, barring maybe X. I think that's debatable whether it's being run well or not. But yeah, it seems like, you know, even myself, who's somebody mentioned earlier that I'm begrudgingly voting yes. Yes, I'm unenthusiastically voted yes. And that is primarily because the performance of the company has not been what we're used to. You know, there's 50,000 Teslas sitting in, I think somebody said you can see them from space, parked somewhere because the supply is now exceeding demand. So, you know, those days are over when you waited, you know, you signed up, you waited 6 months to get your car. Now the used prices of Teslas is, you know, through the floor. So it's a different kind of company. And those are the things that irk me as a shareholder. But the pay package was approved by shareholders. We wrote it to $1 trillion. Obviously, things have, you know, have come nowhere near that lately. But, you know, the shareholders approved it. The board approved it. He earned it. He met the milestones. So we need to honor our agreements.
And so I wonder what's next, because, yeah, the stock peaked above $400 a share. Now it's under 200, bumping around a level where it was in late 2020, I believe. And is the Musk premium less for the multiple than it used to be? What has to happen, you think, here as a shareholder for it to be you know, worth what it was? And I think you said that you would buy in a major stake again in the 140s.
So I still think we are benefiting from a Musk premium because it's basically investing in Elon Musk companies is a bet on the future. You know, if you look at Tesla as a stock today, you know, the earnings, deliveries, like this is a not based on profitability, you know, or deliveries or any of these fundamentals. It's based on a bet for the future. That's why the stock is held, you know, what is it, 42% by retail investors. These are the institutional investors would not give it this kind of premium, but a lot of institutions would get into the stock when you have 42% retail investors. The man owns Twitter. He gets to get everybody excited by dangling carrots and innuendo on Twitter, and people get frothy and excited, and the stock goes up. It's not the kind of business that I think is becoming of the brilliance of the man and the brilliance of the technology that he gets behind, but, you know, it allowed him to meet all these milestones, and thus he deserves his pay package.
I mean, it's worth putting some context around the pay package. I know you touched on it before, but it was first approved in 2018. At the time, Tesla was bleeding cash, and there were a lot of shorts, there were a lot of skeptics, and that pay package looked fiercely ambitious at the time. It does seem like we're at this new juncture, to your point, where EV demand has softened. Perhaps you're seeing supply capacity outpace demand, but we're also on the eve, potentially, where there's a lot of skepticism, again, around autonomous driving and robo-taxis. So how much now hinges on that vision being carried out? Do you expect we're going to hear anything about it today?
I don't know what's about to be announced today. And, you know, I'm sure whatever it's going to be painted beautifully. It's going to be very rosy and very exciting. I hope he doesn't dance. You know, that was painful. But other than that, I'm sure we're going to hear a very ambitious vision of the future, and I'm sure the numbers will be, as usual, you know, the front-loaded, and we will see X by this very short window date. And of course, we eventually will see it. It's just never within the window that it's projected and pronounced to be.
Now, you're still a stockholder, but you've sold quite a bit of your, I think, earlier stake ahead of this fall, if I'm not mistaken. What would it take for you to buy back in a bigger way?
Like I said, I'd buy back in at around 140. I think that's a fair value for the stock, and and it's a long-term hold for me. Even at 140, I'm not going to be trading it up and down as it goes through whatever roller coaster it's about to go through.